See what the ATR would be to get there, because that could be directionally doable. Market seems to be on a mission. We are gapping higher. Big level at 64. We'll see what happens at opening bell. Pre-market 63.70, which I think we're going to open up around that level anyway. It seems to be doable. Pivot around 63.40. Okay. So let's see. VIX at 16.14. Again, about a 1% move. If we gap higher, there's two levels I'd calculate. About a 1.01% move. So 1.01 puts us around 64. 64.05 to 64.10 for potential top today. And, if we go up all day and we don't come down, then this would be potentially the 1.01. Just watch the VIX around 62.80. Right in there. Okay, couple levels. Opening bell, we'll see what the 50 to 100 spin ATR is using my software here. I would love to see the market stretching these levels and then fade, something we can sell nice and high. Looking this morning on, what exactly it is. Set to open higher. But any reason? We're still not above the highs from last week on Thursday. But today, tomorrow, maybe running right back to them. So that poll that I posted, if we poke the highs from Thursday last week, then everyone that said we retest the highs, you would be correct. About 60% of folks said we're going to hit the highs. And that poll is proving to be correct. There you go. We'll see. So do we get there? 64.27 highs. We're probably not getting there today based on the stretch. If we go from previous day's close 1.01%, it's getting us close, but probably about 20 points away as we head into Friday. No major news today. Um, yeah, again, it's okay, Mark. That's not my thought. Like right into the market open is not my thought. Reason why is if we go gap open, okay, if price goes up, you're spot on. Okay. If we gap open and price falls, that trade's not fun, you know? So if we gap open, I've already calculated my 1% move here. Could I start here with another 1%? And maybe that's enough to get to the highs. I'm just going to sit up here with levels that I'd like to sell at higher credits. So initially, I probably will throw in, I guess we'll see where we open. Like if we open right here and just, do I think we can go higher for the day or lower for the day? Probably. I mean, it is a Thursday. We've had some decent directions. Like this would be Monday, right? Tuesday, Wednesday. So Thursday's going to be another gap open. Are we going to go somewhere? So I kind of like to see what I can get filled on if I do a reverse iron condor, maybe 15 points wide. Is it enough to, let's see what a point, I mean, futures is up quite a bit. 0.64. We're still going higher on SPY. So what's my open here? About points. Geez, man, 0.63. This market is not fudging around. 0.63. I mean, we already opened at 63.84. Um, Part of me like immediately wants to sell this 05 to 10 and just, bear call spread it. And that would be like trade size one, similar to what I did yesterday. Because if we gap higher, we still have a 1% move. We still have to be, fading that move. I'm still going to fade that move. So my first thought with going up 0.6% is that's kind of what the market's been doing every day is going 0.3, 0.4, 0.5%. I mean, this was a huge gap on Monday. Market was up over 1% because of that gap and push. So the market overall was up around 1.5%, but the intraday move on Monday was still a good 0.85. Intraday move here was zero point 0.8, 0.90. Intraday move yesterday was around 0.75. So if we open zero point 0.6, we open zero point 0.6, I mean, we go another zero point 0.6, zero point 0.7. So where does that put us? Zero point 0.6, open around 63.86, go another. Yeah, I mean, if I'm willing to fade this, I'm either fading like the 64.05 and 10, or I'm looking to fade like the 20 to 30, and we're right back to all-time highs again. I don't think it's sustainable. I mean, this market, like stupid little tiny 21 period pullback. Um, I mean, I still think August is sideways. I'd be pretty surprised if August is like, bye bye, we go to the highs and don't look back. This 50-day period, I mean, we're at 270 points since this U.S.-China trade agreement gap. Can you explain the very wide range plays? Meaning what, David? Wide range plays like what? Like what you're seeing here, if I'm like topping and bottoming? I'm trying to, kind of play a range where it's like we don't go too much higher than this, we don't go too much lower than this, and I can trade that. So what I want to do before opening bell is I talked about, adding these extra education segments. I think it's best to do it hopefully these, 30 minutes before we have the market open. And I added, okay, anatomy of a trade, trading strategy breakdown. So anatomy of a trade. Let's talk credit spread. Okay, credit spread today. So a way to play this, as an example, this is what I'm going to look to do today. Um, if I think that there is a top up here around 64.05 or 64.10, then I can create a credit spread to capitalize on that. So if I believe there's a top or a line in the sand that price will stay below, I can create a bear call spread, right? So how do I do that? If I were to sell a call right here, if I sell a call at, let's say, this 64.10, just an example. If I sell a call at 64.10, and then above that, I buy a call at 64.20. Now let's have the conversation on what the risk is like. So I sell a call at 64.10. I buy I buy a call at 64.10, 64.20. What is my risk? So what's a couple questions here? What is my spread width? I'll let you tell me the answer. What is, let's see here. What is the line in the sand? Tell me the answer. And if I collect $2 credit, what's my risk? Tell me the answer. Okay. So I see everyone answering, but let's start with question one. What is the spread width? Spread width is 10. That is correct. Okay, so the width is 10. If I'm trading this on SPX, this is a index related instrument. There's no assignment risk. It's just cash settled. So the line in the sand is 64.10, meaning if I sell 64.10 call, buy the 64.20, and I pull in $2 credit, as long as price stays below 64.10, I make money. If price is at 64.12, that's break even. 64.11, I still make money. 64.09.99, I still make money. Okay, so the line in the sand would be 64.10, 6409.99 or lower equals full credit. Okay, if I collected $2 on the trade, what's my risk? $2 would be my max profit, which means the 10 width minus the $2 credit equals $8 risk. Okay, and this is where sizing is important because if I were to size this where I take this trade for $2 credit and price does come up to hit that level, I would consider taking a second trade at a much higher credit. I take on more risk, but if I get a trade where I take a trade in for $2 and then I take another trade in for $5, that does help me with the break even. Now my break even's probably up above the 64.10 by maybe $3 or $4, and it becomes my line in the sand. Okay, so yesterday in my daily profit play alerts, that's why in the classroom, okay, in your alerts here for daily profit play, I did post a lot of potential orders. Okay, these were all pending orders. Okay, somebody, I think this might have been the question from David, why the wide? Well, I basically just used opening price and it's an easy way to do the math, right? So if I went to 6,300 and went 65 or 70 wide, I'm obviously not taking that risk because if I went 6,300 sell call and a buy at 63.70, that's 70 wide. I'm talking about this one in particular. I'm talking about this trade right here. It didn't fill, okay? It didn't fill. It didn't fill. It didn't fill. It didn't fill. And this one, I didn't get filled at 9, but I did settle. This one would have offered, this had to be close to offering like $7 or $8 credit. I didn't get filled at 9, but I ended up taking this trade for 5. Um, I actually took this in my car. I took this for like $5.05 credit. That trade paid out the entire, like the whole profit because we ended up having price tests like 63.49, 63.50. The high yesterday was 63.53. So that offered up about $8 credit. So I didn't quite get the fill that I wanted, but I was able to grab some profit out of that. Okay. So anyway, go back to this first trade here, just to explain like how these wide trades would work if I did one. Okay. I sell the 6,300, I buy the 6,370. It's the same question I asked before. What's the width? If I sell 6,300, call, buy the 6,370, call, that's a 70 wide spread, right? Now, if I'm asking for a $65 credit, what's my risk, right? So I can take a 100 wide if I want to, but if I'm trying to get filled at $95, what's my risk? 65 credit on a 70 wide, I'm only risking $5 on this trade for a potential, right? So are we going to have an example where this would ever work? One never knows. I mean, if the market were to hit a high for the day, if we hit a high for the day and got a great fill and the market tanked all the way down or had like let's say the 100% ATR on the upside and then fell all the way down to the 100% of the downside, we would probably make this entire amount, which would be amazing because that's like, you know, 12 to 1, right? So we can craft these trades in such a way that we can make a lot of profit. The hard part is when you go out of the money, this is what we talked about, a couple weeks ago. When you go out of the money, meaning price, like our trade is farther away from current price. Okay, so price is at, we'll say 6,000, and I sell calls higher than that, those are out of the money calls, which means I get less credit for that trade, meaning I take on a bit more risk, but it's a higher probability. If you want probability, okay, I'll just repeat this lesson we had a couple weeks ago. Higher probability trades out of the money take on less credit and therefore more risk. Okay. If you want more credit, higher reward, then you lower probabilities because you're playing closer to the money. Okay. But you're going to lower your probability. So if you want more credit, less risk, you're probably playing closer to the money and you're going to have a lower probability. If you want the highest probability, go way far out. Go like 15 delta, 10 delta, 5 delta, 3 delta. There's still risk in that trade. I can promise you there's still risk in that trade. And it stings the worst when you think you have a super high probability trade like that was a 3 delta, that was a 5 delta, and the market still tested it for that day. Okay? There's always risk. I keep saying that. One of these days, you know, everyone will listen. Um, so I don't love just placing a trade that's so far out of the money that it's going to be a guaranteed win because there's no such thing. I mean, if I'm taking a trade that's out of the money, I'm looking at it as an income opportunity, and usually I have a plan B or plan C to repair it if the market's going to threaten those levels. Okay, Jason says, can you do a deep in the money bull put? Yes, you can. Yes, you can. So a deep in the money bull put would be this. Jason, here's an example. Let's say, I don't know, I mean, one that'd be really cheap would be if I were to do 6,900 on this SPX. Just an example. Let's say that, I think by the end of the year, the end of the year, it's just a totally hypothetical trade. By the end of the year, I think that the SPX is going to be at 7,000. Okay, well, let's find out. Let's see how cheap it is. What in the fudge? There we go. Let's go to the end of the year. So December 31st. And I think this is going to be at 7,000. Okay, so what can we trade? If I were to sell a 6,900 or sell a 7,000, okay, look at this. I can go sell the 7,000, buy the 6,975 out to the end of the year. I only risk $400 to make $2,000. Now, what has to happen for that to be a profitable trade? And you can take this all the way down to zero DT as well if you want. But what has to happen on this trade? Price has to move up to 7,000. Okay. So what happens if price moves to 7,000 like next month? Well, then this trade is going to be looking better, but it's not going to be offering $2,000 profit because we still have a lot of time left in the trade. Okay. So there's always, always, always a trade-off with these option trades. There's high probability, there's low risk, there's high risk, there's timing. Like, I'm not saying this because options are difficult. I'm saying that these are just the factors we have to consider. Timing is a factor. Okay. Our strike is a factor. The market's ability to move, the expected move or the one standard deviation of 70+% of the bell curve is going to be usually what the market does most of the time, right? This is what the market does most of the time. There's our 70%. Okay. Two standard deviation, three standard deviation, two standard deviation, three standard deviation. 70%, 93%, 96%. So that's one, two, and three standard deviations. The markets can do whatever they want to do. There's nothing stopping this market from having a 2 to 3 standard deviation move to the upside or more so to the downside. But most of the time, what the options market is good at is pricing in efficiencies, right? The market has a big, silly surge day, and then it goes sideways for 3, 4 days. And then it falls back down and goes sideways. It's like, we never know. We never know. All we can do is base it on probabilities and then define our risk. But you can go deep in the money, deep out of the money. You can play the game at the money. It makes sense if you're at the money, you're pretty much going 50-50, right? All right. So really quickly, about 6 minutes before the open. Look, let's do this on individual stock. Okay. Let's talk NVIDIA. Okay. NVIDIA has earnings near the end of the month. What would you like to do on NVIDIA? Just total example. Do you think a top is in? Do you think we're going to go sideways? Do you think NVIDIA is just going to keep ripping higher? I mean, here's what I'd love to do. Okay, you'll see me do this in double ups and waterfall income. If we have a pullback, let's say that NVIDIA pulls back to this level. If it pulls back here, I'm probably going to look at some credit spreads or some debit spreads. So I can sell a call, or I'm sorry, I can sell a put and I can buy a put. And if price stays above that, I can pull in full income. And if we have another dip, I can sell a put, I can buy a put for income. That's what I'm looking to do on, any dips. If I want to do a top here, then I can do a sell call, buy call. As long as price doesn't go above that, I make money. So this is why I'm still adamant about I'm looking for the market to give us a little bit of a pullback. 50 period moving average, previous all-time highs. If we, you know, come up to the highs again and poke the highs ultimately to fail, it's sideways. It's August. You know, what type of look, Europe's on vacation. Markets are light, volumes are thin. If the market keeps ripping higher, okay. I mean, I would think September, like when the Fed cuts, I feel like that's going to be a pretty interesting catalyst for the market. Probably bearish. If we are higher going into September, I feel like September is going to be the time that the market actually shows a decent correction. Okay. So ways to play these markets: simple credit spreads, simple debit spreads. If you think there's a top in the market, you sell a call, you buy a call. You can't lose more than that, and you take your trade. If you think there's a bottom in the market, i.e., the market comes down to here, market comes down to here, market comes down to here. These are all levels I wouldn't mind taking dips, 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 dips. So then I sell a put and I buy a put. That creates a bull put spread. If the market bounces there, my line in the sand is the sell put and my defined risk is the buy put. If price stays above it, I make money. If price goes below it, I know my risk, right? You have the width of your spread. So if I did a 10 wide spread, so let's say I sell the 6,000. 6,000 I sell and the 59.90 I buy, that's 10 wide. So what do I pull in credit wise? If I pull in $3, $4, $5, the width minus that credit is going to be my total risk. Okay. But credit spreads, debit spreads are ways for us to kind of create lines in the sand. And if price is above that or below that, depending on our strategy, we can make money. So that's why if you look at a credit spread or the risk profile, so let's say that this is price, okay? Price is going up, price is going down. If you were to call a top in the market, okay, so I sell a call here. This is my sell call. So I sell a call and then I buy a call. Actually, that's not right. That would be if I sell a call here, I have my break even on the width. This would likely be my, yeah, I guess full risk would be my buy call. That's right. So buy call. If we're beyond that. So let's use that example of if I sold today, like the 64.10. I sell the 64.10, I buy the 64.20. If price is greater than 64.20, if price is greater than this is where my max risk is. So this is going to be my 10 wide risk. Okay. But if I pull in $2 credit, this is going to be a net $8, right? $8 would be my max risk, but $2 would be my max profit. So I can make two to risk eight. Some people might say that's a terrible reward to risk. But if this is a 96% probability, you can still make a lot of money doing that. One loss will set you back a couple of trades, but you can still trade through this with win, 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 and still make money, right? So it's the line in the sand. So before we see opening bell here in a minute, Number one, we can always spend more time in this stuff. Okay. How can 6420 be? No, no, no. It's that was a risk graph. I was talking about risk reward. So this is price. If I'm so it's, this would be a bear call spread. If I sell the 6410, okay, this would be price going higher. This would be price going lower. Here, I'll show you. I'll show you. Let me use a different example. So I'm going to build that same trade. Option strat. This is an easy way to visually see the trade. So I'm going to do a bear. I'll just flip these around. So if I were to sell the 6410, 6410 by the 20, this is what the trade looks like. See what I'm saying? So if price goes up, I have risk. If price goes down and stays below that line in the sand, I make money. I make money here. There's my break even because I'm pulling in credit. There's my risk. So it was illustrating the break even. That was my point. Okay, opening bell. We are at 63.77. Okay, two ways I could trade today. We're kind of sitting right in the middle. Hopefully these gamma levels aren't too sticky. Let me see if I can do a reverse iron condor today. So today is the 7th. Can I go 70, 75, and 85, 80? 70, 75, 85, 80. I'll COH artist hit profit. That's another winner for pinch point scanner. Try to get $6 on this trade for 15 wide. 595. $590. I'm willing to take up to like 580 here. Come on, man. It's not going to work. I'm going to see if I can go 20 wide. 70, 75. So I'm going to go here. Try to get 610. I'm going to go 20 wide. 610 not filling. 605. Come on, man. These have been tough to get filled where I want. 595 final offer. I'm going 20 wide. All right, just got filled for 590. All right, so daily prop play I'm in. I'm looking for a directional day. So I'm putting in a trade where I have a little dead zone and I can make money on either side. So like this. So I have a 20 wide dead zone. If I'm greater than 63.85, just made money on Palantir as well. Newsbreakers hit profit. Those are good. 63.85. If we're above 63.85, we make money. If we're below 63.65, we make money. If we're in the middle, I've got some risk. And that risk would be 410. Okay. So I'm going to post that trade. God, this market is just like freaking determined. Okay. Room to run to these potential highs. Potential top in the day, I'll modify this. So I had two trades just close out for winners. Palantir, that was a newsbreakers trade. Palantir, newsbreakers, hit profit. 237, closed at 308. 71 cents. That was a 30% take profit on Palantir newsbreakers closing. Dion, I'm going to update that in the alerts. So newsbreakers, trade management, uh, Palantir, profit target hit, entry for 237 debit, closed for 3.08 credit, 30% return. See what trade that was. Palantir was trade number 67. Okay, that trade's posted. Um, COHR hit profit, filled at 366. Yeah, baby. Little little extra fill on that one. COHR, that should have been a 50% take profit. That is pinch point. COHR 251 debit closed at 366. Nice winner there. 31.4. Automatic profit on COHR. Cool, cool. Okay, yep, I'm posting it right now. So in the daily profit alerts trade for today, it's 20 wide. I'm going reverse iron condor. And I'm starting with the 63.65. It's going to be an in the money bear call. So this is an 8-7 expiration. 63.65 call. 63.70 call. 63.85 put. And 63.80 put. So $5.90 credit, 96 max profit. If price is less than 6365 or greater than 6385, 410 max risk in the dead zone between 6365 and 6385. Okay, trade's posted. So it's in Telegram. I'm going to post it in the tracker right now as well. Center price around 6385. 6365 call. 6370 call. 6385 put. 6380 put. Okay, credits in. Yep. So Randy, it's in the tracker. It's in Telegram. Telegram alerts. Okay. And let's take a look at our ATRs today. So we're already at the 50% ATR. We've got some firm resistance around 6,400. Two levels I can calculate. I'm going to start looking at, so now that we've had a nice little pop to the upside, I'm going to see for today, what is that like 6410 zone? So right now, 6410. Okay, looking at this, I mean, I get $2 credit on that trade. See if we can stay below that for the day. See if I can get 210. Come on. Some, all right, just got filled at 205 credit. Another trade for daily profit play today. 8-7 expiration. 6410. 6420. And 6415. And 6425. Price is less than 6410. Keep the full 205 credit. Okay. That trade just got posted. I do have a public Telegram channel, yes, but the alerts I'm posting for the trades I'm taking are inside the member Telegram. Okay. So 64, 10, and 15 are going to be my lines. If we open up here, so this would be that gap up. Market's already up 0.7%. Okay. If we continue to try to get to these highs, let's say that we move, VIX is at 16, right? VIX continues to move a little bit lower. So VIX, we're looking right around a 1% move. So if I go 1% from yesterday's close, that puts us right around this 64.08 level. Okay. But if we go from intraday, so we had a low here, let's go up 1%. That potentially puts us up to around 64.30 to 40. 64.30 to 64.40 modified top with VIX and intraday low. Okay. So my 64.10, so there's 64.27. If I look at prices today, 64.10 is here and 15 is here. So I'm going to just get these exactly set up, 64.10 and 64.15. I'm going to see if price will not break those levels today. If we do, I'm going to be sizing in for more credit at a higher price. Okay, I'm going to set a chart alarm here to see if we end up giving some back today. If we give some back. So if we come back down to like 63.75, I'm going to see what my bear call spread is trading for. And I'm going to see if I can get a directional push today, one way or the other. Okay, so don't go more than 20 wide, Randy, but potentially shift the strikes. Like you can go 65 to 85 or 60 to 80, maybe 70 to 90. You know what I'm saying? Like keep the 20 wide dead zone, but just move the strikes around a little bit. That might help. Or I do like the bear call spread for $2. So if we have a day that, we're up today and the market's dropping aggressively and filling this gap, I love that 205 I just took because I'll probably hang on to that one for the entire day. So it was a 63.10. Okay, 205 credit. So on the day, potential profit on the day would be 90 cents from the reverse iron condor and 205 from the bear call spread combo. So potentially I've got about 305 bucks. Well, I guess 295, 295 in the day. If I'm going to max it out. If I've got max of 295 just out of the gates, if I grab over 200 bucks today, I'd be pretty happy. Um, yeah, we'll see. Okay, so my dead zone is a 65 by 85. Okay, so that's my dead zone, meaning I want price to either stay above it or get below it. So if we have a gap fill today, or if we, try to sniff out these highs, like we could have some good profit there. Okay, so we'll see what the market can give us. Sticky level at 63.40. That's the positive negative gamma flip. I can see that here on my dynamic trends. We did hit the 50% ATR. One big move on the day. I don't know if this is possible, but we hit all these ATR levels here, hit the 50%. We have the stickiest spot right back here at the open, And if any of these start to fill back up, it's, I mean, possible that maybe we get back to the gap or fall down to the 50%. A lot of times, if we can, directionally trade towards the 50%, this is, kind of one of my key tricks with this software is let's say price open here and we have a 50% gamma that is really, really large. The directional trade there is high probability, like 70 plus percent. But we opened at the 50%. So that took away my directional play today. Andy says 205 credit. Yeah, I mean that's fair. If we were going lower, I mean let's see if we get immediate profit, let's watch, okay? Let me go into organize these trades. So I'll go SPX. This is the 64, 10, and 20. And the 15 and 25. And then this is going to be my directional play. So right now I've got about 50 bucks profit already on the trades. So that 205 combination, if I put these together, let me ungroup this. Um, ungroup this. Now I have one bear call spread combo. That's a trade that took in 205. So it's already trading for $57. Okay. If this one gets over 100 bucks early enough in the morning, I think I'm just going to take the profit and not sweat it for the day. So let's see what price gives us. So yeah, if you see like 205 trading for, $1.50, that's a quick $55. If it's trading for 75, 80, $90, that's a good win on the day for sure. So like I said, anything for me like 50 bucks to 100 bucks with the risk that I take is pretty solid. Yesterday I made $160. If I didn't manage the trade as aggressive as I did towards the end of the day, it would have been a $550 day. But keep in mind, the day before that, had I not managed it early, I would have lost $2,300. So I'm fine. I mean, yeah, it stings like, oh, 500 some dollars. Yeah, that'd be great. But the day before, had I not managed it, I would have lost $2,000. So I'll take the, 130 the day before, 160 yesterday, and just keep letting the numbers add up. Okay. So now we just kind of hang out. Um, so more than likely, I might do some easy numbers here. And, if I'm going to look to fade something today, well, we already have an intraday low that's a little bit lower. So this is going to modify my 64.30 level. If we come down here, I'm still going to like kind of like this is a pretty easy gauge. To the upside, if the VIX is going up, which is, it's starting to move a little bit higher, right? Like that's a big spike in the VIX from 16 to 16.4. And again, what does this tell us? If the VIX is going up, generally that means that the SPX is going down, right? So unless the VIX is going to like go up and stop, we're sitting right around like a 1.01% move, 1.02, 1.03 would be kind of our intraday volatility expectation. But if the VIX is going higher, 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 more than likely this is going lower, 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 which means this trade right here should be looking good for 205. And this trade, if we get below this yellow box, is good for 90 cents. Okay. More than likely, if everything's looking good on this trade here, I will probably get out of this one for break even or better. Break even or better. Okay. And if we come back and fill the gap, for example, get out at break even or better, keep this one for 205 or get out of it at, 60, 70, 80% of that max credit and not sit on it all day. Yep. So it's going to go fast. Yeah. Andy's already up 60 bucks. There you go. Like, and again, if you're looking for that for the day, take the profit. It's already up $57. You can take that quick profit and be done for the day. So we don't have to make it really complicated. This is why on Tuesday I ran a master class for daily profit play, and we talked about, game planning, setting our levels, trade sizing, so we can, properly manage our risk throughout the day. Okay. Let me see. So right now my reverse is, I think I'm good. I like the bear call spread today, kind of a lot actually, but it also, I don't know, we might see the market do this too. We've seen this happen several days in a row, which is market, establishes a low and then just tries to melt up for the entire day. Like this bear call spread might be threatened. But if I can close for break even and get 50 bucks right now, I could just take the profit. So let me see if I can get out of here for if I go 590. I got filled for 590. Let's see if I get filled for 5. I'm just going to try to close this one out break even. Not less than that. Well, I'll set it right now at like 5.40. I'll try to make some money on it first before I just give up on the trade. But watching this one, this probably has the fastest potential for profit. If price goes down this morning, then this 205 will show like $50 profit, $75 profit, $100 profit. If price is going lower, we'll see that one pay the fastest. So keep an eye on that. Do I hold? No, I try not to hold any trade to the end of the day. Yesterday, it was one of those situations where the price was slow, 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 slow to the upside. We had that 30-minute surge, right? 30-minute surge yesterday around 10:30, and then the market just sat there sideways, 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 sideways. But it was testing my bear call spread all day. So I knew that yesterday going into the close, I'm gonna have to manage some risk. I'm gonna have to manage some trades. But ideally, I don't want to hold really any of these zero DTs to the end of the day. And especially the reverse iron condor, because once we get towards the end of the day, that dead zone starts to fill up. I will show you an example. I'm going to take this trade right here and price this out. So I'll go option strat. I'll price this out. I'll show you what this looks like. I'm not closing it yet. Yeah, if I close that out at 590, that'd be a break even, John. But I'm not closing it yet. Okay, let me build. All right, so I have the 6365 by 70 and the 6385 by 80. So 65 by 70 here. Okay. So this is what my reverse iron condor looks like right here. So this is my dead zone. So right here is my dead zone. The most I can lose is $4.10. Okay. If I'm greater than 85 or I'm less than 65, I keep 90 cents. That's how the trade works. Now, what I want to show you is during the day, if I take this all the way to expiration, look, there's not a lot of risk in this trade throughout the day. If price is above or below, there's not a lot of risk. Okay. When I get towards the end of the day, if we're anywhere into that dead zone, that risk starts to grow very fast after 3 p.m. Right? See it? If you can see my time, I'm at like 3 o'clock right now, 3 o'clock Eastern time. By 3:20, by 3:30, by 3:40, right? Like that risk starts to really fill up. So if I'm somewhat in that dead zone, I really don't want to be holding this trade that long. Does that make sense? So if we're, 2 p.m. Eastern time, 1 p.m. Eastern time, I'd like to think that either one, price is above, price is below. We can start to see some profit in here because I'm maxing out at 90. So if I can see, 50, $60 of profit, I'm going to take it and eliminate the dead zone altogether, right? If I exit on notify, of course, of course. Yep. So the trade looks like that in full, but I'm trying to manage, throughout the day. This is actually a really nice visual tool. just to kind of build your trades and see how time, price all comes together in a working, option trade. So right now it's, 9:54, so it's now. So there's still, I mean, there's not a lot of risk in the trade. We'd have to go way up here to like 64, 15 or 20 for us to be getting paid on this trade right away, which does happen. We've had trades whereby like 11 a.m. or 12 a.m. we've had, 85 to 90% of that max profit because price was so directional. Okay. All right. Let's get rid of this. Nvidia going crazy up. Well, if it's not Apple like it was yesterday, it's Nvidia today. I mean, and first off, let's see what crazy is, David. Let's see what crazy is. Um, Max profit, it's not 590, no Matthew. It's 90 cents. The max profit. So if you saw that the way I built this trade out, you're not making 590. Okay. What do you make on this trade? Max profit's going to be that 90 cents over here, 90 cents over here. And then the difference is I'm five wide minus the 90 cents. My 410 is going to be my break or my dead zone. Yep. Okay. All right. Let's see what going crazy is on NVIDIA. I mean, it's up 79 to 83. It's up two and a half, 2.25%. I mean, it's up. Okay. So I wonder, um, Finviz heat map. Yeah, let's go heat map. So Apple and Nvidia. I mean, we got some big companies showing green today. So is that enough to, push the market and stretch them even higher? Micron's up today. This is all like big stuff for chips, right? 100% tariff on chips if manufactured in the US. I don't know how easy that's going to be. I feel like there's going to be exemptions. I don't know, how the writing is really going to work here, but that's a big push for semiconductors, big push for chips. Apple had a huge day yesterday, like one of the best days in months. It was up over 5%. Now you got Nvidia up 2%. Like when you got large market cap stocks moving, it does, influence the entire stock market. Coinbase is up. So anyway, initially the advanced decline today is pretty decent. Get out of here. We've got about 68% of stocks advancing, led by some big ones. So yeah, I'll give it credit. It's up. All right. So let me do some from numbers. Now, two things. Based on the VIX, we're trading around 16. Okay. We were down to like 1607 up to 1649. To be safe, 16.5, meaning like a 1.03% move. Okay. So 1.03% puts me up to around 6410. Okay. That's based on yesterday's close, 6410. That's my line in the sand for the bear call spreads. If we're going based on intraday price action, then I'd start at the lows we've seen so far and still potentially go up 1%, which is around 64.30. 64.30 to 63 or 64.30 to 64.40. So if this market's going to go higher, do we hit this high at 20? Do we get to these levels right? Like I'm going to have to fade this move. If I want to make money on the day and my 64.10 is not safe, then I'm going to have to try to sell up here to mitigate my risk. If it gets there, it might not get there, right? We might gap up today and go nowhere. So I'll keep an eye on everything. I do have a 550 pending order on that reverse iron condor, yes. So let's do this. I'm going to type this in a Telegram. So for DPP summary, trade summary, reverse iron condor entry for 590, looking for 540 debit or lower. And the bear call combo entry 205 credit, looking for, I'd say, 1.35 or lower. So those are kind of my ballpark debits right now to close out the trades for profit. So I'm looking for about 50 bucks on the reverse iron condor and about $70 or better on the other one. Okay, so I'll keep an eye on everything today. And then I've got to watch my dead zone. Give me one moment here. Okay. So just doing some light monitoring today. That I mean, it's really it. Like, um, we are pretty sideways. I don't think the market's going to necessarily just stay right here between 70 and 80. My bigger levels are at 64. My bigger levels, there's two spots I'm watching today. Either we get to 64 or we come back down and fill the gap at 63.40. That gets me out of my dead zone. I'd be a little disappointed to see the market do this all day. Okay. Especially in this, this kind of not a massive gamma level. So I don't think price would necessarily stay there. So it's either we, muster up the courage to chop around and then find a directional flow for the day that maybe gets us up towards highs again, or we give some of it back and we find this positive negative gamma flip level, which is right around the open. But I'm going to keep an eye on that. If you're doing a standard daily profit play, standard's probably working out just fine. So Dave, how's Dave doing today? How's Larry doing today? How are my usual daily profit play? You just crush it every day with daily profit play. How are those going? Because we now have 30 minutes of indecision, no real direction. So that's kind of all you need, right? Okay. Lily just hit profit. Actually, no, Lily just got filled. That would have been earnings. So Lily beat on top and bottom, but earnings down That's a fill on newsbreakers. Okay, Eli Lilly just got filled. Only risking 250 on that trade. See if we can, push down and then pull back up. Set a chart alarm at 670. That's a pretty big surprise move, considering we hit top and bottom and Eli Lilly's down by almost 15%. That's a pretty wild move. Take profit is if we turn 750 credit into, I mean, honestly, 650, 550. I mean, I'm only risking 250 bucks, so if I can make 100, 200, and $300, I'm making more than I'm risking on the trade. Yeah. So I'm just going to set a chart alarm and see if I can turn that into a, probably a 100 to $200 winner. Try to get a 1 to 1 or better. Okay. So look, the day is unfolding in front of us. Pretty busy morning for daily profit play. I want to talk more about this. I mean, look, we got a lot of members that come in every single day. We got a lot of watchers, a lot of viewers every single day. I also have a bunch of traders that aren't getting any of these alerts. Okay. So if you are watching, wanting to get some of these alerts every single day, here's a good way to do it. This is what we do. Okay. The idea has evolved into I'm trying to win the day. That's it. Like daily profit play is now a service that I've got some core strategies. My goal is to win the day. So with about $1,000 risk, our target usually every single day is going to be around 50 to $100. Okay, that's going to be the examples I'm talking about. So for the last 7 months, we've talked about this. We've seen this firsthand pretty much since Trump took office in 2025. We have a news-driven market, and this is the news. This is the person, this is the entity that drives the news right now. Some of the craziest moves that we've seen, they lead directly to Trump. I mean, even this week, we're talking 100% tariffs on chips and manufacturers that don't make things in the US. So it's not a bad thing. It's just like they're big numbers and it's grabbing headlines. Okay. But something is happening right now that I think a lot of investors are missing because, I think the severity and the reaction and the chaos to everything that Donald Trump says or tweets is starting to get a little bit more muted and the market is kind of used to it now. And so instead of the market going on these crazy, gap ups and gap downs every time that something is said or tweeted, we're starting to see a much smaller, more neutral reaction. Okay. And this is where we have a nice hidden gold mine almost every single day. And most traders don't have a clue how to take advantage of this unique period, right? Market makers still have to price high news driven uncertainty, right? They have to price this in. Yet price action is much less chaotic. And by the end of this presentation, I want you all to realize how big of an advantage that is.